Closing beat, everybody. Happy Thursday. How you doing out there? All is good? Hope you're getting some sleep. Sleep? What's that? Welcome to our show. We call it the Closing Beat, reference to our name, Jazz Wealth Managers. We are financial advisors here at Jazz Wealth, and I hope you'll check us out at Jazz Wealth, and really appreciate all of you that have. It's been a busy week. I really appreciate that. We've done close to 450 conversions. Has your advisor been talking to you about that? The opportunities in the stock market while they've fallen here? Well, we're working to death here for our customers, make sure they get every opportunity out of this decline. And we got a good show for you today. We got a lot to talk about here, so we'll dive pretty much right into it. Tonight is our class for customers. Every Thursday we do a class. Whether you come or not, we're going to do it. It's a way for us to reach out to you every week, let you know what's going on. That's tonight at 8 o'clock over there in the Speakeasy. We're going to be doing the stats on 30% market drops and recessions. We're going to go over every single one of them. Yes, we show every single one of them. I want you to see what has happened in the past, not necessarily that happens in the future, but to give you an idea of how markets respond over time and repetitively. So we're going to cover that with all kinds of great geeky stuff there. So grab a drink, come hang out with me later. If you're one of our customers, we'll be out there in a Speakeasy. Oscar Peterson is our jazz artist of the week. He's got a song called In a Mellow Tone. Kind of mellow. That was in reference to today. The stock market during the day was rather mellow. Overnight, not the case. Rather wild overnight session if you happen to be paying attention. We actually were down 900 points on the Dow, over 1,000 points actually at one point. And so we'll talk about that. As for our customers, they're taking advantage of all the opportunities of the downturns here, not just adding more to your stocks, but the 4 things we talked about in last week's class. Good job. You're making me work, but I don't mind. Here's the class, by the way. I put it up at the top so you can see it. If you're coming to our class tonight, it'll be here in the bottom left, and at 8 o'clock, it'll actually just pop up live. You don't have to do anything. It'll just show you that I am here, and I'll start talking and sharing things with you there. Let's talk about the stock market today. Can I do this? Will it come back? There you go. 192 on the Dow to the upside, 11 to the upside for the S&P, and 160 on the old NASDAQ there. The Russell 2000 beat the S&P today. The S&P was the laggard in terms of indices there overall. But as far as the S&P goes, you see that on the screen here, a little bounce off of lows. Hey, 29% more to go, and we'll be back at highs, right? So I think everybody will take any little bit that we can. Now, like I said, during the day, lower volatility. In fact, if you look at volatility today, it was down 10%. That's pretty impressive, right? So during the day today, basically, when there was a stock that was up on the day, it stayed up on the day. There was not all this volatility where it was negative and then positive again and whipping around everywhere. It was very calm. In fact, I want to share something in a little bit with you on the oversold stocks. Yesterday, I sort of went on a rampage talking about how people are overreacting in the stock market. And today, there was a lot of great news. There was an incredible amount of great news as far as individual stocks go. I'll go over all of them, but you saw no mention of that on TV today because that doesn't keep your eyeballs. What keeps your eyeballs is doom and gloom, panic, and all that stuff. So we'll cover that over there. The Senate Republicans talking about a $1,200 direct payment now instead of $1,000. I just bring that to your attention. I think Trump wants $500 for kids as well. They're talking about that. We'll see. It's just talk at the moment. Jobless claims. Now that was negative today. Can I go back here for a second? Let me look at this. Here you go. Jobless claims. U.S. initial jobless claims. Huge spike, up 70,000. And if you think that's bad, this is a week-over-week stat. So this is talking about last week. Wait till you see this week coming up. We'll find that out next week. Now, here's the thing. In the long run, we can afford it. If we zoom out, I'll try to go as far back as I can. I'm not sure how far it's going to let me. Can I do 10 years here? There we go. There we go. So looking back 10 years here, look, you got just a small bounce, right? In fact, the 4-week moving average is just barely ticking up there. So we've got a lot of room to go before we'd see anything nasty. But in the short term, that is pretty incredible. A rather large spike in the jobless claims. It is the largest week-over-week spike since November of 2012. And now you can see that. Like I said, if you think that's high, wait till next week. I'll bet you it's going to be even higher. We're already planning on this. One thing I want to point out before we get into this here, Marriott. Did you see Marriott today up 4.6%? The CEO said, his words, not mine. This just goes into what I was saying yesterday. Yeah, they did earnings and all this stuff. And he said, there is no rational reason for the sell-off in our stock price, even if the virus lasts many quarters. That was beautiful. The way he said it was like, I'm dumbfounded. I cannot understand why the stock is at this price. People are pricing in many quarters of negative, a hit to them, right? Naturally, they're going to take a hit. And we can understand maybe 1 quarter, maybe 2 quarters. This guy was saying, even if many quarters were just flat out shut down, that does not justify the valuation that they currently find on their stock. So very well said if you happen to get to see that. More and more CEOs are going, I don't get it, right? This doesn't make any sense because they're running their numbers. If you have a business, you know your numbers. If you have a soft quarter, you know how much it's going to hurt. These guys, everybody's starting to say this, so pay attention carefully there because you're going to see that come up more and more. Okay, check this out. In the S&P 500 today, Simon Property Groups. Did you see Simon Property Groups? We talked about this yesterday. It hit new lows. They closed all their locations. It was up 24% today. They closed all their properties. And their stock has the best day since 2008. Why? Why did that happen? That's kind of interesting. That doesn't make the news. Best day since 2008. That's 12 years. Whoa, what's going on there? It's oversold. People looked at it and said, wow, even if you stay closed for the rest of the year, that valuation doesn't make any sense. That's a discount. That's, of course, the trader's response, not mine. Check this out. Darden Restaurants. All their restaurants are closed. Nobody's going. Nobody wants to go there. Stock's up 24% on the day. They stop their dividend, close their stores, remove forward guidance, take a $750 million credit line, and the stock is halted during the day. Not because it went down, but because people were rushing into the stock. It was too volatile. They halted the stock on the way up. No mention of that in the news today, right? It didn't get halted for dropping. It got halted for bouncing. How crazy is that? Anyways, look, we'll go through more of them. Hartford Insurance, you know the name here, Hartford Insurance Group. Stock's up 27% on the day. Same thing, it was halted. Largest up day since 2008, October 2008, if you want to go back and see the exact month that happened. Capri, this is Michael Kors and Versace, things like that. Up 33% today. Huh, what happened there? Capri, halted. Because it was going up too fast. It was too volatile. 33% gain on the day. Why? Because it's way oversold. The valuation doesn't reflect reality here. Tyson, you guys know Tyson Foods. Tyson has its largest percent day, 22%, largest percent gain in over 40 years today. Was that because the virus is cured and all of a sudden everything's good? No, it's because people go, wait a minute, had a chance to run some numbers, turned off the TV for 10 minutes, realized that the world is not ending. I think I'll buy some Tyson, right? So the stock has its best day in over 40 years. Incredible, right? Well, we can keep going. I have more names than I have time to give you. Welltower. Welltower was halted today. It was up 23% on the day. Why? People were buying the stock. They looked at the stock, said, this doesn't make any sense. It's not supposed to be priced here. It's supposed to be priced higher. Therefore, it's a discount. DXC Technologies, 33% gain on the day. This is just in the S&P, by the way. I'm not just randomly picking stocks. All I did is go through the S&P. DXC Technologies, halted. Too much activity. Too many people wanted to buy the stock. Again, halted on the way up, not down. Dish has its biggest percent gain since 2011. It's trading at 0.91 times sales. That means that it's trading for less than what their sales are. By the way, they are trading at 7 times earning, which is a discount relative to its average, and they have a 10% profit margin. People looked at that stock today and said, that doesn't make any sense. The stock should be higher. Oh, it's a discount. I'll buy it. That's what happened today, right? There are so many names like this today. No attention at all. So under the surface in the S&P 500, incredible. Now, I'm not pointing this out because I want you to do something about it. I'm not touting stocks. I'm not saying you should be investing. I'm saying the world has simply overreacted from a price standpoint, evaluation standpoint, right? From a medical standpoint, I'm not talking about that. The virus concerns, all that, of course, be healthy, be safe and all that. But from a market standpoint, ridiculous, right? Way, way, way overreacted. And I'm just trying to point this out so you can see the other side of things, right? My wife hates that because I always take the other side of anything she says because I'm just always, I don't know why I do that, contrarian. Anyways, let's move on. Weakness in the S&P today. American Airlines down 11% on the day. Walgreens Boots Alliance, which was strong, pulled back a little bit. That's all that is. It had a rather sharp rally up. People are taking a little profits because profits are hard to come by these days. And then the other weakness, unbelievable volatility in the utilities. Utilities just off the charts. I'll cover that in just a second. But Con Edison, 13% down today. Con Edison, by the way, trading at over 6 times average volatility, meaning it's wiggling around 6 times more than average and in a larger range, as you can see. I mean, that's a massive, massive move there. All right, let's go through our sector breakdown here before I start going off on a tangent. Every single sector in the S&P 500 is now 20% lower or more from the average analyst estimate. So the analysts get together, there's 17 to 20 in each sector, they look at it and they say, we figure it should be worth this. It is now, every single sector is 20% or more lower than that. The spread between what analysts are expecting and what is reality is now well beyond an extreme that we have not seen since 2008. And in fact, many of the sectors that you look at, which one can I point out? Let's do healthcare. Healthcare, for example, more than 20% away from the average analyst estimate. It has the widest spread currently from their expectations to reality that we've seen since 1 month before the market started to bounce in 2009. We have not seen a spread so far than this. Now, I'm not saying analysts are right, or I'm not saying that this is going to bounce or all. I'm just saying this is a metric that analysts use to look and see how much are things discounted. Every single sector is 20% off from expectations. That's ridiculous, right? So I just want to point that out. You've got consumer staples, utilities, financials, all the exact same thing, meaning the spread between what analysts had expected and what reality was is exactly the same as it was 1 month before the market started bouncing in 2009. Just want to point that out. Let's stick with utilities here. They had a down day, down 5.8% there, retesting the lows if you're looking at a stock chart there. Volatility off the charts, names like Con Edison, Duke, or Con Edison I mentioned a minute ago, Duke Energy, which is here in our area, Dominion, I'm not sure where they're at, Dominion down 10%, all have volatility greater than 5 times normal average. If you're trading utilities or you've used that as some sort of safe haven defensive type trade, you just experience a little more volatility right now. It's not a big deal and it will calm down, but wild ride there lately. Very interest rate sensitive. Consumer staples down 3% on the day there. It was down, but if you look inside the sector, it was kind of spotty, right? We'll go through some names here. Coca-Cola lower on the day by 6%. It's down 30%. This would be where it was trading at in 2017 to give you an idea of the discount there. Volatility on Coca-Cola is 4 times greater than average, meaning it's wiggling around 4 times greater than average there. Pepsi down 3% on the day, now down 20% from its highs if you're looking to see just, hey, what kind of a discount's going on out there. Let's take a look at oil. Oil, even where it closed today, oil has its best day ever in history, right? President Trump said he will get involved in the price war when the time is appropriate. That was his way of juicing the commodity there. It's its best day ever, and funny enough, it follows its 3rd worst day ever. Yesterday was the 3rd worst day ever. Today was its best day ever. That's the definition of volatility right there, if you're interested. Now, analysts have said very quickly, it was within minutes that analysts said, this is overdone. This will not stay this way. They are pricing in sub $20 a barrel at the moment. If you take a look at the price of oil, I think I saved it here for you. You got the price of oil here. Obviously, this hasn't updated. We're down, well, where are we at? We're at $25 a barrel as of today. So this just hasn't quite updated yet. But let's take a look. If you go back 10 years, you're working your way back. But by the time it updates, it's going to be under here. We're actually back to 2012 area. Oh, here, I can show it this way. 2012 type levels here, right? Or 2009 type levels. You can see where the price of oil is. We're breaking through that today, working our way all the way back to 2002 levels when we get down to $25 a barrel. So that's giving you an idea. Here's a big picture of the price of oil since the 80s, right? At our major spike there, we've been fading away ever since. Down here around 25 bucks puts you all the way to 2002 price levels if that's something that you're interested in there. So I just wanted to cover that for you. Not really making any suggestions. I just find this stuff interesting. Retail up 5.5% today, an extended bounce. There's a couple names that stick out in the sector. Stamps.com, we happen to have owned this stock through thick and thin when they lost their deal with the USPS. So we're very happy to see this recovering in such a significant way. But Stamps.com stands out a little bit. Pets, right? You look at PetsMed, immediate and sharp reversal there. 20% gain on the day. That's because they deliver the meds. You don't have to go pick them up there with the concerns and the virus and all that stuff. Communication services higher on the day by 2% as well. Anytime you see communication services higher on the day, always look at Facebook, Google, and Netflix. Those basically, that is communication services. Facebook up 4% on the day. Both classes of Google stock higher just a little bit on the day, and Netflix higher by 5%. Good bounce there for that one. Oh, I found it interesting. Twitter was higher as well. Twitter was a standout there, 10%. That's in the communication services as well. And so, right, interesting, right? I mean, just you got some really cool stuff going on under the surface right now. That doesn't mean that we're putting in a low or anything. It just means it's something you want to pay attention to. When everything is negative, there's always a bright spot, and there's a lot of bright spots that stuck out in the market today is the moral of the story. Meanwhile, 3% of the S&P 500, actually 2.6% if you want to be specific, is trading over the 50-day moving average. That's 13 stocks. We're basically floating between the 2 and 4% area there with no significant change. 3 new highs today, Gilead Sciences and Regeneron in the biotech space, and Citrix, CTXS. If you're interested. 88 new lows. That's not bad, right? It sounds like a big number, but that's not bad compared to what we've seen. American Airlines down 11%. We mentioned already. It's trading now at 3 times price to earnings, and it's not the lowest valuation out of the major airlines. 3 times earnings. Right? If you have a business and you are considering selling it, would you sell it for 3 times earnings? I don't think you would. I don't think many people would. Anyways, that's American Airlines there. Harley-Davidson, ticker symbol HOG, down 7%. They're closing North American and Canadian factories altogether there. Not good news for them. They didn't need this virus. They've already been struggling. Whirlpool down 7% on the day as well. eBay was another one. Just pointing out some of the weaker ones in the group. eBay lost 5%, new 52-week lows, of course. Some of the strong stuff is going to be market-related. CBOE added 9% on the day. This is the, of course, benefits from the activity, the trading, the exchange fees, and everything like that. CME Group also in that as well, up 8% on the day. What else do I have for you? McDonald's, Disney, those were strong names in the Dow. Counter-trend bounces there. Ford, it's not good news for Ford. Did you hear about that today? Ford actually finished, we'll call it flat, $4.47. Ford gets rid of their dividend. It was 15 cents, which doesn't sound like a lot, but that was over 12% yield. They got rid of it, and they're drawing down $15.4 billion in their credit lines. Marriott suspends their dividend. We talked about that a minute ago. It was $1.92 or 3%. Not a big deal, but they did get rid of that. What else do we have for you? Darden Restaurants suspend their dividends there. Square got approved to open a bank in Utah, which had an earthquake yesterday. Nobody really noticed. It wasn't on TV much. Tiffany's reporting earnings tomorrow. We'll finish up this back end of the earnings season with the last of the retail stocks, and then we'll fire back up into the next earnings season coming in about 2.5 weeks. Yeah, that's pretty much all I have for you there. Bottom line, it was a pretty impressive overnight session. There was a lot of good stuff to see today if you were just sort of hinting or hunting around the markets and looking for stuff there. But pretty cool. Man, it was just pretty cool to see that for a change instead of seeing all red on the screen. So SPY versus the equal weight for the recovery. How would the weighting difference change the faster recovery? So what's funny is the equal weight beats the traditional S&P in a trending market. I don't have any studies on recoveries. That would be a good question. I'd be interested in that. That gets a little attention every now and then because for a while there, equal weight was beating the S&P, by the way. Yeah. Cool. When this thing is over, the wealthy won't get to keep their bailouts. There's going to be a lot of discussion about that, unfortunately. Not only bailouts, but being stock buybacks, right? That's not right. If you have the dough to buy your shares back and now you got your hand out, come on, that's your bad. You made a bad call buying back shares. You know what I mean? You're the company, you're a for-profit company. If you decided to buy back shares and now things go a little haywire and you're like, oh my gosh, we need some funding here, that's going to be a very heated discussion, I'll bet. Yep, I'll bet. Yeah, that's sad. There's not much reason to hold Ford unless you feel like it's worth more than $4.50 a share, and they already had some work to do ahead of this virus. They were trying, but they didn't need this at all. Yeah. Oh, thanks, Finn. Big fan of the show there. I think it'd be a further sell-off when earnings come out, or you have a saying everything is too oversold. I think a lot of earnings is already priced in, to be honest. That part's not difficult because CEOs and their CFOs have been very vocal about what percentage of a hit they're going to take, and specifically how. So that gave analysts a chance. Keep in mind, analysts, they're probably the smartest people second to doctors on the planet, right? They know numbers better than anything, and most of the time they're algorithms anyways. So they've already been able to price in earnings for a lot of this. I have a feeling for names like Disney, where they're like, we're not sure if we're going to open back up and when. I have a feeling they'll still be really, really close on earnings. So I think it's priced in. Yep. And there's a great question there. Why are analysts using historical data to compare the situation to previous times? All the previous data was never during viral pandemics. This is an entirely new animal, so you can't compare. That is false. You may feel that way, but there is always something going on that has to be priced into the markets. It may not be as crazy as this, but we have been through this all the way back to AIDS, and before that, we've been through Ebola, we've been through SARS, all that great stuff, right? So from a medical standpoint, that's all had to have been priced in the past. We've also been through September 11th, China trade wars, oil wars, just plain out wars that we've been through. So there's always a reason to say, you can't use that data because this time's different. It's not true. Not true. There's always something to factor in, and regardless, that's what they end up being. Now, this currently is not the biggest bump in the road we've ever had, right, in terms of a virus. If it continues this way, it could be. So you have a point there that it could absolutely become nasty, right? But for now, the way it's being projected, the way everything's going out, it just you can't say this time is different, right? Different in terms of the episode, of course. I love it. What tools are you using for the graphs and what you see there? That's just actually that's just Thinkorswim, the TD Ameritrade. It's just charts. You could use any charts there. I'm not like partial to them or have a deal with them or anything. It's just right there on my computer. I just pull it up. Yep. I like it. What was the, did I miss something? I feel like I missed something. He was picking on Warren Buffett. I love it. Well, I think I've pretty much covered it there then in terms that during SARS, AIDS, we didn't shut down the country, just curious. Yeah, it's true. It doesn't mean it didn't hit the stock market. I don't want to get into the actual, what I think of the virus and everything, because that doesn't matter. It really, what's happened has happened. I like to kind of focus on what's happening currently. From an earnings standpoint, though, for particular sectors in that case, it wasn't a global sort of shutdown, cruise lines and everything. But remember, cruise lines went through September 11th. Cruise lines went through 2008, all these things. So there's always an event, right? If you want to say this event is somehow different, I don't buy it. I don't buy it. It's all quantifiable when you look at it. Now, some companies are going to take worse hits. I happen to think cruise lines are going to have a hard time, right, when they come back. So you can't look at cruise line data. Let's say it that way. You can't look at cruise line data and say, well, last time this happened. This is a different animal for them, and I'll give you that because cruise lines they're a luxury, right? When you start traveling more on planes, that could be for business, right? There's people sitting at home that need to travel for business. Cruise lines, you don't take a cruise to the Bahamas on business, right? Well, at least maybe you don't report that to the IRS that way. I love it. You like the detailed info? Yeah, we got a lot more tonight. I really I swear, I haven't slept in, I don't even know. I got a couple hours in there, yeah. I haven't slept in a while because I want to research this stuff and share what I can. That makes sense. And tonight we've got a whole lot to share with you. I'll try to keep it short, but grab a drink, come hang out with us if you're one of our customers. I do appreciate you guys hanging out with us if you're not with us here at Jazz, but keep us in mind, and I appreciate all of you that have. And that'll be it. Hey, tomorrow's video, our FinTips video, let's just say it's going to be different. Right? It'll be nothing like we've ever posted before. So if you want to have a little fun, if you're cooped up at home, we've got a video coming out tomorrow and on Saturday as well, a new series that we're starting to not make light of situations, but to try to have some fun here. So It's sort of silly, but I hope you enjoy it. Let me know what you think, and that'll be up tomorrow at 1 p.m. Enjoy the rest of your day. I'm going to get ready for our class here tonight, and we will talk to you later. Thanks for watching.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.